Hello. So welcome to our ESGX and Asia Value Advisors live webinar on impact investing in Asia with our guest presenter, Paul Herman. My name is Philo Alto. I'm the founder of Asia Value Advisors, and I'll be co-moderating this event with Nigel Lake. Today's format will be a 90-minute session, and our presenter, Paul Herman, will do a short presentation on select themes from his new book, Global Handbook of Impact Investing. It's I think the book itself is over 1,000 pages and apparently longer than War and Peace book. So it would be interesting how he can compact that to within 15 to 20 minutes of discussion points. But we will ensure that the thematic areas will globally that resonates will also be touching upon the Asia context as well. And over the following 90 minutes, we will follow that with a moderated discussion and open Q&A. And do feel free to begin putting in your questions in the chat box or Q&A box, and we will tackle them in turn in relation to the topic. With that, I will pass it on to Paul for his presentation. And later on, we will introduce our five distinguished guest respondents, whom I will introduce their name in due course. Paul, over to you.
Thank you, Philo, and thank you very much for organizing and orchestrating all of us together on this global edition of ESGX Live. Very much appreciate all your leadership, Philo, in Hong Kong, in Asia, and from our days co-judging the Global Social Venture Competition in Southeast Asia and East Asia.
Ages ago.
Delight for all of us to be together. And Nigel, thanks for staying up at midnight. It's exact 12-hour difference from Hong Kong to New York. So as we know, the capital markets never sleep. So markets are open in Hong Kong, Asia, and Australia. And I'm coming to you live from San Francisco. It's a little late sunset. Actually, it's just my background. So delighted to have all of you here. And as Philo interjected, this is meant to be as interactive or engaging as you like. So please feel free to ask your questions in the chat box or in the question box. And also, this is being recorded, so you can share it with your friends and colleagues and trustees. We know that in Australia, there's already a waiting list to listen to this episode today. So I'm Paul Herman. And I'm the founder of HIP Investor, and I'm the co-editor of the new Global Handbook of Impact Investing. And as Philo said, it is bigger than War and Peace, and it's more peace than war. So it's a pathway to helping achieve the 17 Sustainable Development Goals, including SDG 16 about peace and justice and trustworthy institutions. So I'm going to give you a short overview of what's included in the book, and really excited to have innovators, professionals, and investors on the ground in Asia, making investments, allocating portfolios, and doing impact measurement and reporting. So I'm going to share my screen here because there's a couple of slides to help guide the discussion. And I'm going to turn this on to a screen share. So this is our second book, actually. It is my second book. My first book was almost a decade ago, The HIP Investor. The Earth Day was the official 11 university. Some of you may have encountered it in your MBA or MPA programs or your PhD programs. It's also available in 20 countries, libraries around the world. The new book on the right, The Global Handbook of Impact Investing, is co-authored by 50 authors, including authors from China, India, and with experience in Asia. My personal background includes experience in Thailand, in Singapore, and Hong Kong. And Nigel Lake, who you met at the beginning, his experience includes Japan, as well as global experience. The foreword is by Justin Rockefeller. So if you want to take a peek, you can go to the Google Books, Google Play version, and read Justin Rockefeller's introduction about the future. And so it's available as an ebook. If you buy it from Wiley.com, it's also has an audio reading, and then there's multiple booksellers around the world. So what's inside the book? Let me just give you a taste of what's inside the book, and then we'll walk you through the philosophy of the book. There's 6 parts to the book. There's the expanding boundaries of impact investing. 2021 has caused a intense focus, not only on the sustainable development goals and frameworks from the GIIN, like IRIS, which Maud may cover as well on our discussion today. It's place-based investing and touches on net zero, which seems like every CEO wants to go net zero in 2021, which is fantastic. Part 2 is about the value of people in impact investing. There's 4 chapters on gender lens investing from authors around the world, including the alpha or risk-adjusted return that could be generated from gender lens investing. There's inclusive investing and diversity, taking the greenhouse gas emissions framework and applying it to diversity. There's sustainable retirement plans, and one of the chapters that I co-wrote, human capital valuation. What's the value of people on the balance sheet? So you can see this isn't just a getting to know you book. This is really tangible, cutting edge, for some people bleeding edge, and it's a great way to get acclimated. Part 3 is about climate and the planet, including fossil fuel-free investing with case studies from China, green transition bonds and social impact bonds and climate impact bonds. And those include the Global Climate Fund based in Korea, which has been facilitating the climate impact bonds. There are 6 chapters on measuring impact. I know several of you on the call are doing impact measurement and impact reporting. You can learn the latest about impact measurement in the book. And then we have on-the-ground experience. We have a full chapter on on-the-ground experience and impact investing in China, one in India, combined with Finland, what's happening on the ground in Italy. So it really gives you a global perspective. And then finally, the future of impact investing, how to scale up impact investing, including in universities. So some of you may know Annie Chen of RS Group. We're fortunate that she endorsed the book and talked about the ideas and innovations and pathways to a better world. Some of you may be familiar with Leapfrog Capital and Dr. Andy Cooper, who I worked with when I was at Ashoka. And some of you may know Rosemary Addis, who's active in the Global Steering Group of Impact Investing. So really encourage you to take a look at the book. We've put the link in the website. It's available on ebook, print, and audio. All right, so let's talk about impact investing in Asia. Again, feel free to put your introduction in the chat box, ask any questions in the question or the chat box, and you'll get replies from a mix of us. And impact investing today, we think of impact as the broad umbrella. Some of you may have a very focused impact view. We think of it as a broad umbrella that includes environmental social governance and the ESGs, sustainable development goals. There's 17 that are waiting for products to be pursued, some of which we'll talk about today. There's climate action, which is entirely necessary for us to make fast advancements, as a lot of innovation in China and Korea and Singapore and Japan is happening today. There's dealing with COVID-19. And in some places around the world, especially in the US, there's things called opportunity zones, which are tax beneficial in place-based investments. And there's discussions and work towards a Green New Deal in Korea. So because I'm an investment advisor, this is to make the lawyers happy. Remember that this is all for your information and education. None of this is an offer of securities, and the past may not necessarily be like the future. So who's doing impact investing today, whether it's in Asia, the Americas, Africa, Australia, Europe? There's families and individuals. And so today we'll hear from some family office experience in our panel discussion. There's wealth managers, and we'll hear from wealth managers today. There's actual foundations and endowments and sovereign wealth, including Temasek is now full into ESG and impact investing. There's investment advisors, pension funds, hedge funds, and retirement plans. And there's 3 big things that you need in doing impact or ESG investing. There's setting your goals. Which of the SDGs will you solve? Will you go for gender equality? Will you go for climate action? Will you go for peace and justice? Will you go for a mix? There's selecting the investments. There's filtering, kicking out less impactful investments. There's tilting, overweighting or underweighting. There's traditional screening. And a new word for hurdle rate, a new criteria is what's the hurdle rate for impact investing? What's the hurdle rate for climate action? What is the equivalent greenhouse gas cost per ton? And the third is reporting. Are we doing what we're saying? Is it transparent? Are we being accountable to what we've promised? And so today, when you do this in your portfolio, it can take any of these actions. So feel free to treat this as a to-do list from today's conversation. If you have a board or trustees of your organization, educate them, get them educated. Feel free to get them the Global Handbook of Impact Investing or other resources. Philo and Asia Value Advisors helps do education of investors. There's goal setting. So in the investment policy, there's not only the risk and return characteristics, but the impact. There's constructing the portfolio across asset classes. It's investments, private and public. There's stocks and bonds. There's funds and ETFs. And of course, there's reporting. And so we'll do a deeper dive into what some of those might be. So there's 5 crises in our time. Some people have said this is scary when I've presented it, that it just feels overwhelming, that there's 5 crises of our time. But there are. There's COVID and health challenges. There's wealth inequality. There's climate crises on Earth. There's equality opportunity of the castes in India to different income inequality and racial inequality around the world. And there's gaps in trust. Our institutions are not living up to our high hopes for them. So these 5 crises demand a holistic approach. These are so demanding that we not only need to use our full portfolio, we need to work across sectors. So the 3 topics that we'll talk about in this introduction are: 1, what are the new metrics beyond just profit, which I learned at McKinsey and at the Wharton Finance School. And I implemented in my first business that created an online wallet for kids, teens, and families. There's innovative investing, putting in place actual capital structures to do that. And then because these problems and crises are bigger than any one company, bigger than any one government, bigger than any one sector, we're going to have to work together. So we're going to cover these 3 topics. So when you study capital markets and you study finance, you study the financial statements. And usually there's a focus on tangible value. What are the plants and equipment and inventory? And in the Standard & Poor's 500, the 500 most valuable companies in the US, which has about half of its revenue globally, historically, 80% plus of that value were these physical assets. Today, it's different. Today, it's a service economy, an information economy, an intellectual property economy. There's the beginning of blockchain and Bitcoin and crypto. There's healthcare. The majority of value is now intangible. It's off balance sheet. And so as an investor, the mechanics, the new metrics include these new methods of value creation: people as an asset, natural resource efficiency, good governance, transparency. And transparency is really important. If you can't see inside, we can't tell what the risks are. But the good news is this 84% of intangible value can be measured. It is knowable, even though it's frequently ignored. And the good news is we're ignoring it less. So, and we'll make these slides shareable, so to everybody who RSVP'd, so you can absorb this information and share it. And we're going to cover some of these new metrics. One of the new metrics is, what's the temperature of the Earth? And the way that I like to get people motivated is, if the Earth's temperature was your own body temperature, how much hotter would it be with climate change? And what you can see from this chart is, if our basic body temperature in centigrade or Fahrenheit starts at a normal Earth temperature, you don't have to get much hotter on Earth, 2 degrees Celsius, 5 degrees Celsius, to either have a persistent fever or to be on the verge of dying, whether it's Ebola or COVID or a really deep flu. So when you're communicating about climate and temperature change, which may not seem like big numbers, think about using this as a metaphor for communicating the new metrics. And in greenhouse gases, there's these elements at the top. And China and Australia have been focused on helping to eliminate methane, nitrous dioxide, hydrofluorocarbons, PFCs that come in refrigerants. So one of the challenges of our future world is air conditioning, which uses hydrofluorocarbons and in some cases tetrahexafluorocarbons. Those are very dangerous. And so as the planet heats up, we're going to have to get used to living on a hotter planet. And not only inside the enterprises that we run, but our customer usage and our supplier usage. And so science-based targets are one way that companies are, governments, even the airports in New Zealand, are focused on net zero or a greenhouse gas reduction. And Carbon Disclosure Project, or CDP, has been leading the way for the past 20 years. Another metric is the 92% of firms, at least in the S&P 500, have diversity policies, but only 19% have targets. This gap between policy and targets is too wide. If we can't measure what the goal is, how do we expect our policy to be effective? In women, this chart varies around the world. In Japan, this is a very depressing chart because there are not many women in management, in staff, on the board. So you can look at this for different countries, regions, market sizes. In the S&P 500, even it's lacking. It's not yet at a 50% balance of gender lens. So this is what gender lens investing focuses on. And this chart right here is from the Dow Jones 30 Industrials, which includes Salesforce, Apple, and other companies you may know. Lesbian, gay, bisexual, transgender rights. This is from the Human Rights Campaign. In 2011 and 2012, they adjusted their methodology every 5 to 7 years. They update their methodology to include more rights. That's climbed back up to something more in balance, but still gaps in those communities. So there's many new metrics. And so inside the book, you'll read about many new metrics and 6 chapters on how to measure this impact and create a baseline. There's innovative investing is the second task that we all have. We need to start putting our toe in the water today. Maybe 1% of the portfolio, maybe 10%, maybe half and half to run it side by side, or maybe going fully committed. Justin Rockefeller, who wrote the foreword, as well as Liesl Pritzker and others, are part of the impact.org. And the impact.org are people who've committed to allocate their full portfolio to innovative investing and to solve these crises of our time. So this is growing fast. We're in the high growth mode. We have funds that are changing their name to include ESG. Some of those are greenwashing. Some of those are genuine. We have some investments that have been doing it along, and we have some that are just getting started. Today, there's more than 10,000 companies reporting their impact around the world in public equities. There's additional ones in private space, but not as many as there are in the public space. You can see in China, almost 700 companies, including companies in Hong Kong, Korea, Singapore, and Japan. They have exchanges, the Sustainable Stock Exchange Initiative of the UN is encouraging has validated more than 24 stock exchanges around the world. And so in the book, we talk about comparisons about companies like IKEA to Unilever to General Electric. ESG ratings can be graded. You can do this on a 100-point scale, a 10-point scale, 5 globe system. But what we found and what the academic evidence has found in each of the chapters in the book has citations of literally hundreds of citations. And I've read, as co-editor of the book, I've read every word in this book twice. And what I can tell you is it's grounded in academic research, academic evidence. And for any skeptic, including your chief investment officer or your chief financial officer, hand them this book as big as War and Peace. That is the evidence today, both of what's happening to date and the blueprint for the future. And when you actually study the numbers of the academic evidence, what you'll find is that higher rated companies, higher sustainability companies, more transparent companies, companies taking climate action, ultimately are more beneficial for investors. There's higher returns about 2/3 of the time. There's lower risk about 90% of the time. So remember, in finance, lower risk is just as good as higher returns from a financial perspective, because we're about risk-adjusted returns. And there's many standards that are emerging and coalescing. The Sustainability Accounting Standards Board, the Climate Finance Task Force on Climate Finance Disclosure, the World Economic Forum has adapted a framework, as well as the Sustainable Development Goals. Again, I'll make these charts available afterwards so you can study them, and they have hot links inside. So across your whole portfolio, and I'm excited that the panel here will be able to talk about all elements of this, is whether it's where you park your cash in a bank that might be focused on people or planet, what type of sovereign bonds, muni bonds, corporate bonds you invest in, including green bonds, green transition bonds, social impact bonds, whether it's real estate investing, which is very popular in Asia, and how to invest in facilities, whether they be retail, mall, stadium, as well as data centers. These can be dramatic improvements from sustainability, dramatic improvements to cash flow and reduction of cash flow volatility. And so there's examples in the book that do that. And even into private investing, into venture capital and private equity. It's very easy to make that a goal when you're just starting. It becomes more difficult as you scale. And so, but what I found in our research over 15 years is the bigger the company, the more economy of scale. And so one large cap company can execute change more consistently than 10 mid cap companies, which is easier than 100 small cap companies. So there actually are economies of scale in large and mega caps that can roll this out into conglomerates or into family-owned businesses where you have control. And then when you map this, you start getting down into the grid of what are my goals for energy and climate change, for housing and community development, and how do I do that across asset classes? This grid is from a group called AlignImpact.com. They advise investors and foundations. And some of these that have blanks still have investments that need to be made. So if you're an entrepreneur, you might focus on some of that white space. But as an investor, you have an increasing number of opportunities to pick something for your portfolio. And in the book, we describe a mix of those opportunities, including in the chapter on China, which talks about foundation investors, venture investors, and professional investors. And in the chapter on Italy, which focuses on fintech and insurtech and innovation that's being built in to traditional ventures from the very beginning. All right, the third, and then I'll wrap up so we can get into a deeper discussion with our panel, is multi-sector solutions. Remember, the crises of our time require a higher cross-disciplinary, cross-sector, cross-organizational solutions. We cannot do this alone. The time for hyper-competition is over. We need a combination of co-opetition and collaboration, as Nigel introduced at the beginning of this episode. The good news is the SDG framework, these 17, if you haven't memorized them yet, within a year, you'll know them by heart. These are intractable issues that need solving. You can start a fund just on one of these. You could have a portfolio just focused on one of these. It may not be easy, but it's necessary. You can group these by the environmental SDGs, of which there's a half dozen. You can group them by the social ones. You can focus on sustainable cities like 9, 11, and 12. This is what we're about. And there's even an SDG 17 for the partnership for the goals. So think about which of these you could build into your investment policy for you as an individual, your family office or family business, your institutional fund firm, your pension. So one of those could be not only climate action, but equitable climate action. Climate is going to affect poor and rich people differently. It's going to affect geographies differently. This is a model that Nick Gower of our HIP Investor team, who's helping us produce this episode, and our team has created around equitable climate action. There's hundreds of cities around the world that have said, we're going to reduce greenhouse gases 50, 80, 100% within 1, 2, or 3 decades. That's an overwhelming amount of shift in the economy and our innovation. And climate is driven by these 6 areas, climate solutions, making energy fossil-free, moving from coal, oil, and gas to solar, wind, and waves, making buildings more resource efficient. What does that mean for cooling, heating, as well as water and energy delivery? Figuring out low carbon and even group transportation, moving to zero landfill. You know, in nature, we think of ourselves as the smartest species. We're one of the few, if not the only species that creates waste. In nature, all waste equals food. So we need to create waste stream. We should not have waste streams in the future. In the meantime, we can capture methane from those landfills and turn it into energy. And on the right-hand side, you can see the mix of capital markets. There's so much financial innovation opportunity here. We're talking about climate impact bonds, green transition bonds. There's private equity as a focus. You now have special purpose acquisition companies that have an impact focus. And you have multi-sector partnerships to work of companies, governments, and nonprofits together. And if you say, all right, is that all ideas? No. We've captured, you can find this on the HIP Investor website and in the book, actual examples of all of these line items where it's been done at least once and frequently more than once. So usually somebody will say, don't bring me an idea, bring me a solution. This is a catalog of solutions. So in summary, there's a lot to do. We all have a lifetime of work to do together. I'm really excited that you're going to hear from experts, innovators, and professionals doing this on the ground in Asia. I look forward to coming back to Asia, as I've been to Southeast Asia more than 25 times. I hope to do that on a biofuel plane or even an ionic driven plane in the future, and to get into our flying cars while we harvest water out of the air and we harvest energy from the underwater waves. But in the meantime, we have a lot of work to do. We have to change how we buy. We have to change how we work. We have to change how we invest. We even have to change how we vote. All of our effort to save this world and to save our species, as well as all the other species we live with, needs this action. So I'll pause right here. I appreciate all the attention you've shared, and I'm going to welcome back Philo, and we're going to go through some additional observations of what's happening in impact investing in Asia. Back to you, Philo.
Thank you, Paul. Appreciate your kicking off with your initial presentation and lots of food for thought. We now move to the next session of our session, which is the moderated discussion. And I would like to introduce our panelists in turn. And as I call on your name, I would appreciate you to turn on your video and audio and say hello. And then afterwards, we'll move on to the discussion. So first up is Stephanie Choi. She is the Sustainable and Impact Investing Strategist at the UBS Global Wealth Management Chief Investment Office. Stephanie, could you say hello?
Hi. Hello, everyone. Thank you very much for giving me time today. And thank you, Paul, for the very insightful introduction to your book.
Thank you, Stephanie. Up next, we have Maple Feng, Senior Vice President at Macquarie Infrastructure and Real Assets. Maple.
Hi, everyone. Very nice meeting you. And thanks, Philo, for the introduction. And thanks, Paul, for the comprehensive introduction of the book. Looking forward to discussing more with you all. Thank you.
Thank you, Maple. And next, we have Dorothy Lam, co-founder and chief catalyst at Dream Impact. Dorothy. You're on mute.
Hi everyone. Great to meet you all. Looking forward to.
Okay. Thank you, Dorothy. I think the reception is a bit bad, but we'll come back to you in a bit. Thank you, Dorothy. And next we have Maud Savary-Mornet, Senior Advisor at the Global Impact Investing Network, GIIN. Maud.
Yes, hello everyone. Hi Philo, and thank you, Paul, for your excellent presentation. I'm glad there are 4 chapters devoted to gender lens investing, which is also one of my core interests. And I'm not only senior advisor for the Global Impact Investment Network in the region, but I'm also investment committee member of a new fund, which has been set up by DFAT, the Australian Department of Foreign Affairs, devoted to gender lens investing. So I'm glad we will have an opportunity to discuss this particular topic.
Thank you, Maud. And last but not the least, you have Tristan Ace, Chief Product Officer at AVPN. Tristan?
Good afternoon, everybody. Great to be here and looking forward to the conversation over the next hour or so.
Thank you, Tristan. So we will dive right into the discussion, and I would like to kick it off by inviting each of you, starting first with Maud, to say a few words about yourselves, your organization, and also maybe react to at least just one point of Paul's presentation to kick it off, 3 to 4 minutes. And then we have lots of time for a deeper dive with respect to the session. So Maud, over to you.
Sure, thank you, Philo. Maybe I can start with my journey in impact investing, right? Because we all understand that it's still a new industry. And for me, it started back in 2008. I was actually working for a French central bank, so very mainstream part of the financial sector. And as many people, I guess, discovering Asia and discovering emerging Asia, I started to volunteer for charity, went into the slums, looked at how it looks like, right? And a lot of activity, a lot of business going on, but also, and I was really wondering, how could we solve these economic and social challenges with something which is not just philanthropy, but also looking at maybe more market-based solution. And that was before impact investment, but that was just at the same time of the global financial crisis, which in a way created really this need of allocating capital to solve economic and social challenges. So long story short, I joined a very small asset manager focusing on financing microfinance institution, which became a large asset manager in ESG and impact investment. And maybe to give you a sense of what is really for me impact investment, right? And for me, it has really been private debt in the context of financial inclusion and climate finance in emerging economies. And what does it mean? I've done a lot of due diligence. I've traveled basically in every country of emerging Asia, from Timor-Leste to Bangladesh and Sri Lanka. So more than probably 150 due diligence on the field. And when you go on the field and you meet with people in poor and rural communities, right, you see that it means they have no access, or they have less access to financial services, bank account, remittances facilities. They have no or less access to crops, to healthcare, to quality education, to formal employment. And all that is even more true for women. And we will come back to this question of gender lens investing later on. But it means basically that they are less likely to achieve economic, social, and political empowerment. So it's true, it was true a decade ago, it's still true in times of COVID and climate change, where poor population belonging to the bottom of the pyramid and women are disproportionately affected. So it's a tragedy, there is a tragedy in poverty, but it also creates economic opportunities. And that's here we come with the concept of impact investment, right? When you can provide access to basic products and services for low-income population, meaning there are companies who are producing these products and services, it also creates an investment opportunity for investors. And that's really the basis of my experience of impact investing in emerging Asia, in microfinance, in climate finance, but also in sustainable agriculture. So today, I'm the senior advisor for the GIIN, the Global Impact Investment Network. It's a global organization. We have more than 350 members in the US, in Europe, and of course in Asia Pacific. And that's the GIIN is a global champion of impact investing, dedicated to increasing the scale and effectiveness of impact investing across the world. Now you have asked me one comment, right? I think later on we will dive down into the discussion, but there was already a comment from one of in the chat box regarding impact washing, greenwashing, and now you can even hear about pink washing, right? When it comes to gender lens investment. And I think, and we really have to come back to what is really impact investment, right? Of course, there is an intention. You want to solve an issue with your capital. You want to allocate capital to matters, to issues that matters, right? For people or for the planet. but it's also about measuring. And if you don't measure, if you can be really authentic, you don't really have the integrity, that's where you enter into the impact washing or greenwashing or pinkwashing. To follow the steps of the previous speaker, right? You don't come with a problem without a solution, right? So the solution definitely comes from the tools that are today available. And the GIIN has actually developed one of the leading methodology called IRIS+. It's a public good. You are welcome to use it. You are welcome to create an account, to choose your sustainable development goal. And it's really much more than simply giving you metrics or indicators to follow. It really guides you through the process, gives you example, and it's aligned with 50 other methodologies. So I stop here.
Thank you, Maud. And that's a great initial starting point. And it's also good that we have both GIIN and AVPN on our panel discussion as well. So with that, I'll pass it on to Stephanie for your initial introduction as well as reaction to Paul's presentation.
Yeah, thank you. So much like Maud, I came from the mainstream financial sector. I actually started my career in London at around the time of the global financial crisis. And that was also when a lot of European funds were growing their ESG arms, and ESG investing in its current form really kind of began to take off around that time. And so I had all this exposure to that field. But when I moved back to Hong Kong, where my hometown is, I realized that there's no awareness even of sustainability, and ESG investing is kind of seen as a niche, like irrelevant misnomer. And so in 2018, I left, I quit my previous job and tried to have full immersion into the sustainable impact investing space in Hong Kong. And, you know, like a few of the co-panelists here have been very important partners in my journey. I ended up joining UBS end of last year, and I'm the Asian Sustainable Investing Strategist at the Wealth Management division. And what that means is that I work on both the research side, so we develop thought leadership around the practice of impact investing, globally and especially Asia within a global context. But we also do product development. So we have been spearheading the development of a 100% sustainable portfolio of liquid capital markets assets. We're proud to say that it's breached the $20 billion mark in assets management as of last year. So that was a huge coup for us, and I think, you know, for me, it's also probably the most kind of proud feature of UBS that I'm really committing to, because although kind of ESG, a lot of people see as kind of a little bit wishy-washy, or like it's not really like on the ground impact. So it's a little bit different from what Maud explained earlier. But what we can do is at a very low risk and low behavior tilt basis, offer investors to divert assets towards impact at scale. And I think, you know, using that as a bridge to kind of comment on what Paul and Maud have both presented, is that I believe today there are so many tools that are very sophisticated, and I think and that is like regardless of you know, investment tools, so investment structures across different asset classes, and data measurement and impact measurement, so that although it's still not perfect because the industry is still relatively new, but today I believe that there are so many resources and toolkit available that there's no longer any excuse for anyone who wants to do it to say that, oh, I'm not doing it because data is still immature, or like, oh, the tools are still immature, because we have this data now and we have the experience now. And I believe this is a very exciting moment to be in this industry.
Thank you, Stephanie. And we'll get back to the no excuses part as well. And it's also good that we also have Stephanie and Maple wearing their institutional hats, and we can go deeper on that afterwards. The next, I will pass it on to Dorothy as it relates to the unique perspective that she brings to the discussion of walking the talk in her work and also in her journey. Dorothy?
Yes, for sure. Hi, everyone. Dorothy, co-founder and chief catalyst at Dream Impact. We are a platform to help social ventures scale up both their impact and their business. So really looking at how they can self-sustain through different various business models, revenue models, blended finance models, etc. We have our space and community. We're very much about building that human capital, I think, as Paul mentioned. The tightness of the community, that's really where the impact starts. That's where from the grassroots, from the people to people level. And then we also built ecosystem building. We're working with Tristan on various capacities, as well in Hong Kong and Stephanie on other stakeholders. How can we bring them into the scene, whether it's investors, private investors, government, universities, educational systems, etc., NGOs, not-for-profits to really work together on specific topics. And lastly, on impact capital to channel capital for these ventures to scale up. And I think Philo brought up the walking the talk, really being a second generation of a family business, really that taking that asset that we have on our hands, which is properties, that we can then create social value out of that. I think it's really important to not just invest in other people's projects, but also taking what you have and actually turning it into projects and platforms that can then impact other organizations as well. So leading the way, and really, I think are you willing to make the switch, right? Something that I think about a lot. You can read more about impact investing, you can read more about sustainable finance, but are you going to take your dollars or take your assets that you have and actually create the value, the social value that you want to see? What is the real impact that you want to create in the world? So I think responding to Paul definitely on the multi-sector collaboration is what we see is quite important in Hong Kong to create that impact. Thank you.
Thank you, Dorothy. And I like the part about is like creating the impact, and also not just in terms of shifting careers, but also mindset of impact, which we can touch on later on. We move on to Maple as well, as it relates to not just her professional work at Macquarie, but also as an entrepreneur within the organization, embedding impact as part of their work. So Maple?
Yeah, thanks, Philo. It's Maple here. I've been with Macquarie Asset Management for almost 8 years. First 6 years as investment professional focused on investing into infrastructure assets in China and Pan Asia. And for the last almost a year and a half, I've been working on setting up a global impact infrastructure investing strategy for Macquarie Asset Management, which is the fiduciary duty type of fund management business for Macquarie. I think in simple terms, we manage on behalf of ultimate capital owners like pension funds or insurance companies, manage their capital on behalf of them investing into different strategies. So my focus area in recent year and a half has been around setting initial investment strategy formation, develop an impact management and measurement framework for the product that we're going to launch in partnership with Tightline, as well as other works, including supporting and executing product launching activities to both internal stakeholder as well as external stakeholder, including a bit of fundraising. And on top of the, as Philo mentioned, on top of the fund management sort of work, I also get to participate in a few cross-division collaborative efforts within Macquarie to prospecting a few impact initiatives. For example, I get to work with Macquarie Foundation, so Macquarie Capital Advisor business units to sort of work on overall impact initiatives. I think in the summary, where I sit is within the big financial institutions, in particular the part of the business where we as institutional asset managers that manage third-party capital and wants to come into impact investing space. So a couple of interesting observations from my work. The first, in terms of what institutional asset manager can contribute to impact investing, is really about first is scale, and the second is quality, which I can expand a bit more, depends on time. And a second, what impact investing allows institutional asset management to do is to unlock additional or unlock further risk-adjusted return opportunities beyond its existing playbook, right? And also allows institutional asset managers to better focus on deliver long-term value with better alignment among different stakeholders. I think lastly, a bit of uniqueness with institutional asset managers. When we are in the process of launching a impact investing strategy, there's a bit of additional complexity in internal stakeholder management, which may not be a bad thing. And also this a bit of, we need to get our heads around how adjacent we want our strategy to be with existing investment products and how differentiated we want to be. And just quickly responding to one of Paul's points around setting the goals, setting the selection threshold, and the reporting mechanism and measurement framework. That's exactly what we've been focused on as a key part of our impact investing product formation with these. And I can share a little bit more if there are interest from the group later. And thanks, Phil.
Thank you, Maple. And Maple brought about a very important point, which is that in the space of the development of impact investing, a lot of the focus have always been on the measurement and management piece. And it's only very recently, and we can see this more and more going forward, that the verification of impact is becoming more prominent over time, and hopefully we will this will be more mainstream over time, but we could discuss it further. Last but not least, we have Tristan, and it's great that Tristan can join us. He newly joined AVPN literally last Friday, so we couldn't have his name on, but Tristan has a broad experience in this space for a long time, and I'll pass it on to him for his perspectives.
Thanks, Philo. Yeah, please do be gentle with me. I am only into my first few days at AVPN, so I might not be able to answer all your questions just yet. But it's great to be here. As Philo said, I'm the newly installed Chief Product Officer at AVPN, but I spent the last 11 years in Asia working in the broad field of social enterprise impact investment with the British Council, first in Myanmar, then up in Beijing, and for the last 6 years here in Hong Kong. So as I said, I work for AVPN, which is a social investment network. We have about 600 members, of which I think everybody on this call is one, or almost everybody. If you're not, then please do join us. And it's great to see actually members on the call who we are currently collaborating with. Paul, you mentioned the importance of cooperation and collaboration in your initial presentation, and indeed I think that idea of collaboration is central to AVPN's work and our approach to how we build the ecosystem. And just to talk about a couple of those collaborations, we're currently working with UBS on our soon-to-be launched social finance center. So watch the space for that. And we're also working with Macquarie, who've invested in our pooled funds, the COVID response fund, which we just launched earlier this week. So I think collaboration is actually critical and will be critical to the success and further strengthening of this ecosystem. In my opening reflections, I wanted to reflect on the journey that's happened over the last, when would it be? 2000, about 8 years, I think. It was 8 years actually ago. that the UK launched the then G8 Task Force on Impact Investment, and this year sees the UK lead the G7. And I think that's quite an interesting time frame to reflect on the progress that's been made, and I think be interested to see what efforts are made this year to further demonstrate that global leadership in driving forward impact investing. So around 2013, we saw that G8, the task force launched. And since then in Asia, we saw the establishment of the National Advisory Board, or the Impact Investing Council in India. And I was also with Philo back in 2018, we're at the launch of the 2 national advisory boards in Korea and in Japan as well. So we've seen significant progress in building that infrastructure. We've seen some government leadership as well over the years. Most recently, I was involved with working with the Bangladesh National Advisory Board on their impact investing strategy. And we're currently also working with the Indonesian government on looking at how to develop their sustainable finance center as well. So that progress is really, really encouraging. And of course, we've seen huge increases in the amount of capital that's been allocated to impact investing. But at the same time, as that good news story, I don't think we can forget that we've also seen this come at the time of the backdrop of widening inequality, increasing wealth concentration, and worsening global issues. So the question I have is, is this happening fast enough? And are we being sufficiently ambitious and transformational in the way we are thinking about impact investing? I could talk more about some of those specific projects we've done with governments later in the day, but those, I think I might leave it there for now.
Thank you, Tristan. And we have already completed our first round of the moderated discussion. So we will now make this open, more open-ended. And for the panelists, please begin to look at the questions that have been coming through in the Q&A box as well as the chat box. So maybe you could weave that in to your process. And I'll pass it back to Nigel and Paul, because it would be very interesting for us here in Asia to hear similarities, differences of what you see in the US and also Europe, like global and the regional contrast, and then we can get our conversation going. Paul, Nigel, over to you.
Fantastic. I might make one quick comment. There was a very good question that came up about how companies are reacting to this, and the gap there is between those that really have understood the power of acting on sustainability. And I think Unilever is quite a good example of that, because it has driven much of the way they've thought about the business for quite a number of years now. And that organization has been transformed from really a dreadful performer for a really long time. I remember it as being just a low performing business probably for the first 2 decades of my career, and it's really changed. And the thing I wanted just to flag very briefly is that there is this really big challenge, and this is probably hard to see in this gallery view, but if you zoom in, you've got on the one hand the Sustainable Development Goals, which are a great driving place to drive towards, and lots of frameworks and standards and reporting bases to use. And then at the other end of this kind of rather tortuous set of connections, you've got share price performance. And of course, what people do to drive sustainability is often just a really long way away from what they're doing to drive share price performance. So part of the solution is, how do you join those two things together, as companies like Unilever have done, and actually use action on sustainability as a lever to drive performance, to think about it as driving efficiency, improving relationships with stakeholders, actually supporting growth, ESG by another name. Paul.
Sure. Yeah, Nigel has so much global experience, from being born in Dubai to working in Japan and I think every continent. What I've seen in my frequent visits to Asia and collaborations in Asia across Japan, Korea, Singapore, Hong Kong, Bangkok, as well as in Indonesia and Cambodia, is the power of entrepreneurs and entrepreneurship. And there's so many unique ideas just getting started, whether it be organic farming and rice and shrimp farms, I remember Philo, you and I were judging one of the ventures about how to have cleaner shrimp and shrimp farms. And so usually when you have a shrimp farm in many places, including Asia, you dig a hole, you line the hole, you pour water in the hole, you raise shrimp for about 2 years, and then there's so much nitrogen and waste in that. And so innovations to help those run for 3, 4, 5 years from innovation and tech labs that then migrate into the university students, young MBAs, young undergrads who then want to commercialize those. And then some of those local innovators are part of family businesses, multi-generational businesses. So I think one of the powers in Asia that isn't as prevalent in most areas around the world are the multi-generation businesses, as long as they can act on it. And so some are sometimes more traditional, and some are just very innovative and experimental, and have become conglomerates from that innovation, and have strong supply chains and relationships. I'd say one of the other leading practices in Asia has been the true transparency and clarity, but also century-long vision of companies in Asia. And so back at the 1999-2000 turnover, Time magazine, which you may know is a 100-year-old magazine, they did a review of each of the past 20 centuries in the millennium. So 100, 200, 300, 400. And the quote, and this may be no surprise to the people on this call, was China was a leader in 18 out of those 20 centuries. And it's only in the more recent two of industrial revolution and European focus, has it not been that. But the 21st century is definitely positioned to be an Asia-focused century again. So I'd say those combination of core values, the skills and expertise, the mix of innovation, but also fast following, and then this type of cross-sector collaboration, sometimes with a different political environment. So that's something to be aware of how to navigate the freedoms of different types of societies, and how to stimulate the investment, how to empower the financial sector and what loans are in the financial sector. So when we talk about like cross asset class investing, there's really a wide variety. There's not only the 17 SDGs, but there's everything from cash and banking to fixed income, to private equity, to public equity, to real estate. That's another leadership area. When you look at who's listed in the public markets, there's a lot of real estate companies, there's a lot of infrastructure companies. In Thailand, the BTS, the subway transportation system, is listed. The roads with revenue collections. So thinking, observing globally what each of the regions are strong at, and how to connect those supply chains, but also now with our 5 crises, it's really important to think how to be self-sufficient. So how can we be self-sufficient in countries or regions and optimize globally, but with all the challenges we're facing, including COVID, this massively decentralized self-sufficiency. So companies who are able to export solutions that make individuals and regions self-sufficient will be really have growth opportunities.
Thank you, Paul. Dorothy, do you want to pick up on the impact careers in terms of what you guys do?
Sure. I think also wanting to respond in terms of the large cap versus small ventures impact and ESG difference, and how different investors can kind of think from a different perspective if you want finance first or is it impact first investing. If it's more finance first, are you looking at ESG metrics integration for large cap like liquid assets, etc. But I think there's definitely a lot you can do in terms of direct impact and with smaller ventures that there are, you can look at the stock exchange or like there are companies out there, but it feels very far-fetched. Like what is the impact that you can really create if you invest in larger assets versus if you support a smaller company to grow and the people that they can support. I think the decentralization needs to come that way to really support ventures and projects that you can directly reach. And I think definitely we have to work bottom up and also top down, but I think there's a lot more joy and a lot more happiness in terms of working with people you know directly. So I highly encourage and recommend that for people that you can think with a very portfolio mindset, and I think that that's great to move institutional money, but also on a personal level. Are you taking care of your own well-being? Are you taking care of your family and your friends? Are you volunteering your time? Are you supporting small businesses and local businesses? I think you need to be equipped with both mindsets in order to make the biggest impact. Yeah, and I think maybe Philo wanted to, something we're also working on. It's also talent. I think the talent piece is something that is crucial to building this whole impact sector, because we need more people like Stephanie, like Maple and Maud, who have like amazing experience in financial backgrounds to really be hands-on and get your hands dirty to structure products, create alternative infrastructures for impact and sustainable finance. So how can we build talent pipelines to start encouraging new leadership and new people, new blood to join the sector and build that foundation.
Sounds good. Thank you so much. Nigel, do you want to take the lead on this one? You're on mute. Sorry, Nigel, you're on mute.
There are a couple of great questions in the chat asking, are there really good examples in the Asian region of companies who have acted like Unilever and really tried to embrace sustainability throughout everything they do? And maybe weave in with that the kind of cultural barriers there are of affecting change. And just my perspective on that, having lived a little in the region but not a lot, is that it's plenty of places where there is good long-term thinking, but there are also parts of the region where short-term action can come really slowly. The challenge is the action, not the long-term thinking. But I don't know if anyone on the panel has got perspectives on companies that have really done this well. Stephanie.
Yeah, I think so. I've been trying to dig up some tangible case studies, because this question actually comes all the time. Because here, like a lot of UBS's clients, wealth investment clients are entrepreneurs, and so the first thing they would ask is, oh, but it costs so much money to invest in it upfront, right? The initial investment into cleaner fuel sources or cleaner supply chain, there is a cost incurred. And I think that there are two aspects that I'm trying to lead them to. The first is, like, if you look at a case study, I think if you look at the textiles manufacturing industry, which is actually very vibrant and important in Asia, it's where, like, probably most of our previous generations made their first bucket of gold, I guess. And this industry has been completely upended over the past 10, 20 years because of fast fashion, because of rising waste treatment costs, because of emissions and client demand as well, right? And because a lot of these textiles manufacturers are feeding into global brands. So an example is Shenzhou International, which is a Chinese-based Hong Kong listed company. They have voluntarily embarked on the sustainability journey around 10 years ago. They've invested in their in-house water and waste treatment facilities. They have switched from coal to natural gas, despite the costs. And they have they source cotton from Australia, so it's responsible cotton. And they also have like labor training programs, worker training programs, and in their new Vietnam facility, they even have a siesta room for their workers, so that they have like a bit of a break time, right? So all of these practices are very different from the traditional Asian textiles manufacturing factory. However, as a result, they have actually seen extreme stickiness and market share gains, as well as share price performance. So if you look at their cost base, yes, it is higher, but because textiles manufacturing is a scale business. It is a capital intensive business. So by achieving that scale, they're able to make back that money. And if you look at their returns from an ROE perspective, it is higher than comparable peers. So I think, this is a case study of a company that is Chinese, operating in quite a dirty industry, where it's very easy to be like the rest of the peers and be highly polluting and rely on migrant workers, but they've really invested and it's paid off for them. So, and I think this, because textiles is a consumer facing business, and because it's so dirty that the waste is so apparent, that it's kind of at the cusp of all of the drivers that we know are coming to a head right now. But as the ESG movement deepens and as regulations continue to tighten, it's sure that these effects would become more and more apparent across different industries. And I hope that if we have another call next year, that I would have even more tangible case studies to share.
Yeah, that's a fantastic example. And I was thinking then in terms of the cultural issues might go to Maud, and particularly with what you're doing around gender, which is in some parts of the Asian region is clearly a massive challenge. Fascinated in your perspectives on that and what is working, what is really driving change.
Sure, thank you. And before I do that, maybe I pick up the question from Alisa, which I like and relates to your question anyway, right? The social cultural challenges for impact investing in Asia. I come from Europe, but I've been in Asia for more than 20 years, so I hope I can bring a bit of perspective on that. And I see actually two big challenges, right? One has been already alluded to. Stephanie mentioned it. It's this sense that because lines are blurred and because industry is fragmented and because there may be confusion, it gives somehow some sort of excuse, right, to take action, whether it's on impact or whether it's on ESG. And the second point, and it has been also alluded by Stephanie, it's a connection between return and impact, right? And it still ticks very much in the audience, less and less, I must say, given all the work that has been done by Philo and by many of us here to educate and really share really data on the supposed trade-off between impact and return. But the GIIN actually produces a study, the GIIN Impact Annual Survey. The most recent one was last year, 2020, based on data 2019. And it's pretty clear that actually impact investors are driven by two things, right? There is an impact motivation, but there is also a financial motivation. So you have a couple of them who are going in the space because it's really central to their mission, and you will find faith-based, for example, values among them. But more and more, it's because they are meeting clients' demand, and there is a growing demand from stakeholders to take into consideration environment and social issues. We have mentioned already the next gen, but there is in general a demand for more sustainability, but also, and it's an attractive proposal, right, related to other opportunities. And today we see that 7 out of 10 impact investors are actually looking at risk-adjusted market rate returns, 7 out of 10. So that's an important finding, and it's not always so well understood. The second point, and you have mentioned it as well, right? Today you have a variety of choice as investor. I mean, when I started in this space, probably you would be looking at private debt, maybe a bit of private equity, and it would be really limited to a couple of sectors, right? Certainly financial inclusion, which was already there. But today it's completely different, right? And I think the initial presentation was very clear, right? You have a lot of choice: private debt, private equity, public debt. We have not mentioned yet blended finance, but you have also a lot of vehicles who blend actually different type of capital, catalytical capital, and more commercial capital into blended finance vehicles. So protecting actually the investors into their investment. So that's an important point. Now, to come back to gender lens, it's interesting because I was already in Genderlens, except I did not really realize it. And Genderlens is really about realizing the value of placing actually gender equality, SDG 5, Sustainable Development of 5, really at the center of an investment thesis. And there are various ways of looking at it, right? You could choose, for example, to focus on companies which are led or owned by women. That's one way of doing it. The challenge that you may face is that, as we know, the pipeline may not be that huge, right? Given social and economic and barriers that have actually stopped women to set up and create their companies. You have also another way of looking at it, which is to look at women as consumer in a way, and focusing on companies that will provide product and services contributing to the life of women. And here again, you look at sectors like financial inclusion, but also water and sanitation, access to clean water, access to clean energy, which are all very beneficial for women, and particularly in emerging countries. And you have another way, again, of looking at this topic, genderless investing. It's really about unlocking the value of diversity, unlocking the value of having more women on board. And there was actually a good illustration in the initial presentation on diversity or lack of diversity. And why would you do that as an investor? You would do it because it has been proven multiple times by multiple studies, so there is really hard fact about it, that diversity brings efficiency. Diversity in teams brings more diversity of perspective and more efficiency. Companies who achieve a better diversity and including gender diversity demonstrate a better performance. And so on and so on. So there is a very strong business thesis behind it, and it's really great to see that in Asia, and that's really quite a new trend in Asia, but a very powerful one. We see many initiatives, many funds. Some include blended finance, some don't include blended finance, but we are really focusing on genderless investing as a business thesis. And today, as an investor, again, you find a variety of choice. You have funds focusing on venture capital, companies led by women and more at an early stage. For example, Teja Venture, based in Singapore. You have also funds who are more looking at private debt. You have blended finance, and one of our members at the GIIN, the Sasakawa Foundation for Peace, has actually done a lot of work with a blended finance fund, investing into emerging women in emerging Asia. And to say a few words about the latest initiative, to which I am part of as an investment committee member, DFAT, so the Department of Foreign Affairs and Trade of Australia, has set up a fund called EMIF, and it's really focusing on SMEs. So it's funding SMEs and bridging the SME gaps, but also bringing a transformational journey to this investment through the genderless investing. So through a mix of technical assistance, definitely, to help those companies unlocking the power of genderless. But also, there was really a very careful construction at the portfolio level, at the investment committee level, to bring already diversity and avoid some of this gender bias. So a very exciting, actually, development and cross-cutting with many sectors. And I think we are just at the beginning of it.
Well, that's fascinating. And I know, Philo, you're desperate to ask a question. I was just going to add one quick thing, which is the point there around diversity enabling other things to happen, I think is really important. There's a great initiative in Sweden, it's called Women Building Sweden, where gender was used not for itself, but rather because it was identified there was a particular cohort in management, which were the women who were more naturally collaborative and would help to unlock some of the shifts that were needed within the paper and construction industry within Sweden. But just with that, I'll pass to Philo, because I know you're desperate to ask a question.
Yes. Yeah, I wanted to be mindful of time because we do need to finish at 2 p.m. sharp. And in the interest of time, I would like to encourage our panelists to maybe review some of the questions that's on the chat box and also Q&A. But I'd like to hear more from Maple and Tristan. Maybe you can share your respective thoughts and reflections, maybe for 2 minutes each. And then afterwards, we will go to the rest of the panelists, and then we'll try to wrap up soon, if that's okay. So Maple and Tristan, whoever wants to come in first. I think there are some questions on the chat box.
Perhaps I can jump in first. Also, there are a few questions around investor behaviors, or especially from an institutional investor sort of change of behavior. In my personal opinion, I do think a change of behaviors from the ultimate capital owners is very critical for the entire shifts to more sustainable economy or extra. That will further catalyze the behavior change at corporates or company, as Stephanie mentioned, because change of investor preference will ultimately absorb some of the costs bear by the company. So in my sort of recent work with setting up this fund, we do observe an interesting sort of dynamics with like pension funds, insurance company, or corporate pension schemes, where many of these capital owners are thinking of setting a separate impact investing pool, or at least they're looking for a better way of investing. For some of them, it's not yet a sort of individual dedicated pool. It's embedded under either their respective private equity strategy or infra strategy or VC strategy. But we do observe a trend from investors, a point of view, wanting for better financial product that will deliver both social and environmental outcomes alongside financial return. And it is the job, or it is the opportunity for asset managers or fund managers like us to structure a better product for those investors. And ultimately, I think the biggest contribution as an asset manager is to come up with a better solution for the investor and mobilize those big capital pool ultimately towards solving a environmental or social issue.
Thank you, Maple. And I'll hold my thought in terms of the final closing words, but I'd like to pass it on to Tristan, because as it relates to all of these developments, some of them are driven by investors, some of them are driven by entrepreneurs, but I'd like to check in with Tristan as well from a policy perspective. Is there anything that policy can or should do more of so that investors, entrepreneurs, and regulators, what have you, will be able to move things even further, given that our multiple crises in our lifetimes is right front and center? Is there anything that we could do further? What are your thoughts on that?
Thanks, Philo. Well, I did ask you to ask me difficult questions, but what I was going to say, I will build on that with my reflection on the socio-cultural question, because I think what's an important distinction that we see in Asia is that relationship between the welfare state, civil society, or philanthropic or third sector and government. And that's a very different relationship that exists, for example, in Europe. Whereas in Europe, we've seen the role of government perhaps play a much larger role in providing that subsidy, providing that market building role. In Asia, I think the opportunity exists with philanthropists. So I would love to see philanthropy stepping in to play that role in that market building, in the market building that's required. And Maud, you mentioned the potential for blended finance, and I think that this philanthropy capital can really play a role in providing that catalytic effect, that catalytic oxygen that these entrepreneurs need, that patient capital to really grow and flourish. So I think that's a real opportunity in Asia, and that's perhaps is a bit of a difference in the way that we might build the ecosystem, is that role that philanthropic capital can play in providing that patience, in providing the oxygen that we need to grow. In terms of your question on policy, well, I think that policy, there's always going to be an implementation gap and an implementation lag between policy and legislation and its actual longer term impact. Now, we've seen, I think, some really innovative and progressive policies. The CSR law in India is only really now starting to demonstrate its real impact. It's taken a few years to do that. The Thailand Social Enterprise Promotion Act that was passed in 2019, again, that's going to take some time before we start to see what that really means in terms of shaping the social economy in Thailand. So I think we're seeing really positive efforts and endeavors by government, but that will take some time to really filter through into longer term impact. What I think is really important, however, and what governments can do, and which can have profound short-term impact, is signaling. So I would love to see the G20. I would love to see leaders talk about the importance of impact investing, because that then gives the confidence in investors in the business community that this is something serious, this is something that they should be taking note of. And so that signaling effect, I think, can have really profound short-term impact. And I'd love to see more leaders stepping up and talking about the value of impact investing as a way to build back better after COVID.
Thank you, Tristan. And I'd like to echo the point about the philanthropic capital. In fact, to be even more precise about it, it's actually philanthropically motivated investment capital, wherein the support for ecosystem building, support for unrestricted capital, support for other forms and instruments that would otherwise be very structured for institutional investors to take up on, and philanthropic capital providers would have a big role to play in collaboration with policymakers in conjunction with the data that institutional investors will be building over time as they have the track record. I'd like to ask maybe Stephanie and Maud to wrap in, and also Dorothy to wrap in their closing thoughts for 2 minutes perhaps, and weave in some of the questions that resonate with your, in the chat box. So any one of you, feel free to jump in. Thank you.
So something I've been kind of struggling with, and I think several of the questions today have touched upon, is really how we process impact, right? Because, yeah, as Paul also mentioned in his presentation, that there are a lot of investments or tools now where like there are hurdles, there are minimum like rates of impact that you want to see in order for this to qualify as sustainable or impact investing. And a lot of it has to do with the amount of greenwashing and the need for credibility. However, I hope that we can transition to a state where we can have dynamic impact considerations, right? Because I think in order to achieve the SDGs and in order to avoid the worst kind of climate risks, etc., I think we must start to focus on the delta, and the rate of change. So if we are always only investing in companies that are already doing very well, or if we only invest in kind of small genuine impact but with quite small projects, it's difficult to foresee a way to get there. So if we can start to have a little bit of a leap of faith and also like a bit more kind of overall industry data consensus, we might be able to work towards a time where, okay, it doesn't matter if you are currently an oil company, but if you can demonstrate tangible investment efforts that could potentially change like the way you do business, and that estimated impact is huge and so big that we are able to trust you with our investment, that this is going to change the world. Instead of I think at the moment financial analysis is already very fluid, but like impact analysis tends to be a bit black and white. So I think a lot of the work that at least I think we have to do as an industry, is kind of focus on how can we make sound projections in the future that is robust and credible, and accountable as well.
Maybe to echo to what Stephanie said, right? I think the whole industry has already evolved a lot, but there is still much more to do, right? And one of the work, for example, that the GIIN is doing, and it echoes Stephanie's remark on measuring impact and integrating impact with other consideration, right? It's really to move from, yeah, let's measure the positive impact of investment and track them with metrics and etc., towards more benchmarks, right? And benchmarks that could happen at the portfolio level, that could help comparing actually the impact of an investment versus another, a sector versus another. And the work is being done. I actually encourage you to join. There will be a couple of events to actually explain the process coming from the IRIS Plus team. But eventually, I guess the purpose will be really to allow an investor to look at the efficiency of its investment in impact with comparability, with authenticity, and with a good basis of comparison. And that will be really a very exciting development when we get there.
I would say a lot of people might ask, like, where should I begin with impact investing? There are 17 SDGs, which one should I do? I would say just to ask yourself, what is your most passionate issue that you feel? Is it climate change? Is it gender lens, gender equality? Is it education? Is it water? Is it diversity? And so start with where you care the most about impact, and that would make it more tangible and easy for you to manage. And also then start with where you are and what you have. Are you managing a portfolio of assets? Then start there. Are you an entrepreneur? Then you can start there. So I think wherever you are along the asset class, and you can create an impact where you are.
Thank you. I'll pass it on to Nigel and Paul because we only have 1 minute left. So, but I think we can just leave this chat. I guess there's a virtual room open for a while for the audience to take note of your email addresses. Nigel, Paul, over to you.
Thank you very much. Look, it's been a really fantastic discussion covering all sorts of different things. A sincere thank you to all the panelists. If anybody is watching on YouTube, please do hit the like button, assuming you've enjoyed this. This will help get the message out to more people too. And then looking ahead to next week, we are going to the Amazon, indeed, with a Swedish guide to talk about whether green growth or perhaps sustainable growth is possible even in places where there are indigenous peoples. So I think this will be a really quite fascinating episode. We're joined by a group of people. One, Per Espen Stoknes talking about his new book, Tomorrow's Economy, and also Minari Ushuga and Belen Paez, who are living and working in the Amazon with indigenous nations to try to make all this real. Over to you, Paul, for a final wrap up.
Sure. I just want to thank everybody for joining today. Philo, thanks for orchestrating and bringing us all together and always problem solving. And to Dorothy and Maple and Stephanie and Maud and Tristan, so grateful for all your leadership, starting with your passion, as Dorothy called out. That's the best place to start. If you're working on your passion, you never have to work. It's how you work hard, play hard, and make the world a better place. As Nigel introduced, there's more than 45 episodes of this ESGX. Thank you, all of you, for contributing your intelligent questions, your thoughtful visions, and your action today and going forward. So feel free to check out esgx.org for this free online content. Share it with those problem solvers and innovators. You know, when you take a personality test, only 10% of people are rate as problem solvers, but that doesn't mean that others won't follow. So take the initiative, solve problems, start working on it. You learn from everything, success or failure. And I really appreciate this opportunity to share the Global Handbook of Impact Investing. Hope you can share it with your networks. And until next time on ESGX, Thank you to our producer, Nick Gower, up midnight on the East Coast in the US, Nigel Lake in New York, and Philo Alto in Hong Kong. I'm Paul Herman, and if you don't see me here, you'll see me in seat 24A next to the window. See you next time.
Appreciate. Are you gonna leave this room open for about 5 minutes for people to take notes of?
If you'd like to copy the chat, there's in the chat in the bottom right, there's 3 dots. You can click those dots and hit save chat. So in the chat box in the bottom right, next to where you type in your question, there's 3 dots. Hit save chat, and then it should say chat saved, show in your folder. We'll also make the slides available to everybody so that they can learn some more.
Sounds good. Okay, I think people got it already. Thank you so much. Really appreciate it, and have a good rest of the day.